Gold, a name synonymous with wealth, luxury, and enduring value. For centuries, this precious metal has captivated civilizations, serving as a universal symbol of prosperity and security. In today's volatile financial landscape, gold stands tall as a beacon of stability, a safe haven for investors seeking refuge from economic storms. Unlike paper currencies prone to inflation and devaluation, gold retains its intrinsic value. Its worth is not tied to the whims of governments or the fluctuations of the stock market. This inherent stability makes gold an attractive option for those seeking to preserve their wealth and safeguard their financial future. Imagine a world where economic turmoil grips nations, currencies falter, and stock markets tumble. In such uncertain times, gold emerges as a steadfast asset, holding its value and providing investors with much-needed peace of mind. Investing in gold is not merely a financial decision. It's a strategic move to protect your hard-earned savings and secure your financial well-being for years to come. The allure of gold is deeply intertwined with the history of civilization itself. This precious metal has been a symbol of wealth, power, and beauty for millennia, captivating the hearts and minds of people across different cultures and eras. From the ancient Egyptians who adorned their pharaohs with golden treasures, believing it to be the flesh of the gods, to the Roman Empire that built its wealth on a foundation of gold coinage, this precious metal has played a pivotal role in shaping our world. The Romans used gold not only for currency, but also for art, jewelry, and even in their architecture, showcasing its multifaceted value. Throughout history, gold has served as a medium of exchange, a store of value, and a symbol of power and prestige. It has been the backbone of economies, a standard for trade, and a safe haven in times of financial turmoil. Its enduring appeal lies in its rarity, beauty, and resistance to corrosion. Gold's unique properties make it not only a desirable material for crafting exquisite jewelry, but also an essential component in various technological applications. Unlike other metals that tarnish or decay over time, gold retains its luster, making it a timeless treasure passed down through generations. Heirlooms made of gold often carry stories and traditions, connecting us to our ancestors. The discovery of gold has sparked both joy and conflict, fueling exploration, conquest, and trade routes that spanned continents. The quest for gold has driven human ambition, leading to the establishment of new settlements and the expansion of empires. From the California gold rush of the 19th century, which drew thousands of prospectors in search of fortune, to the modern-day pursuit of gold in remote corners of the world, the allure of this precious metal continues to captivate and inspire. Today, gold mining is a global industry with advanced technology and methods enhancing the efficiency of extraction. Gold's rich history serves as a testament to its enduring value and its ability to weather the storms of economic uncertainty. In times of crisis, gold often emerges as a reliable store of wealth, providing stability and security. It's a tangible link to our past and a wise investment for the future. As we look ahead, gold remains a symbol of enduring value, bridging the gap between history and modern finance, and continuing to shine brightly in an ever-changing world. In an era marked by economic volatility and geopolitical uncertainty, gold stands as a beacon of stability, offering investors a safe haven from financial storms. But the allure of gold extends far beyond its safe haven status. One of the most compelling reasons to invest in gold is its ability to hedge against inflation. When the purchasing power of paper currencies erodes due to rising prices, gold acts as a store of value, preserving your wealth and protecting you from the ravages of inflation. Moreover, gold has historically exhibited a negative correlation with stocks and bonds. This means that when the stock market experiences downturns, gold often moves in the opposite direction, acting as a portfolio diversifier and mitigating overall investment risk. In addition to its inflation hedging and portfolio diversification benefits, gold also serves as a crisis hedge. During times of geopolitical turmoil, economic recession, or systemic financial risk, gold tends to appreciate in value as investors seek safe haven assets. Gold in your portfolio, exploring the different avenues of investment. Investing in gold is no longer the exclusive domain of seasoned investors or financial institutions. Today, even everyday individuals are exploring the potential benefits of adding gold to their investment portfolios. Today, a wide range of options is available to individuals seeking to add the stability and security of gold to their portfolios. These options cater to different investment strategies and risk appetites, making gold accessible to a broader audience. One of the most traditional ways to invest in gold is through physical ownership. This method has been trusted for centuries and continues to be a popular choice among investors. This can take the form of gold bars, coins, or bullion, offering investors a tangible representation of their investment. Physical gold is often seen as a hedge against economic instability and inflation. While physical gold provides a sense of security and control, it's essential to consider factors such as storage costs, insurance, and the risk of theft. Proper storage solutions and insurance policies are crucial to safeguarding your investment. For those seeking a more convenient and liquid investment option, exchange-traded funds, or ETFs, provide exposure to the price of gold without the need for physical ownership. ETFs are an excellent choice for investors who prefer a hands-off approach. Gold ETFs trade on stock exchanges, allowing investors to buy and sell shares throughout the trading day with ease. This liquidity makes ETFs a flexible option for those who want to quickly adjust their investment positions. Another avenue for gold investment lies in mining stocks. Investing in mining companies can offer a different kind of exposure to the gold market. By investing in companies engaged in the exploration, extraction, and production of gold, investors can potentially benefit from the leveraged upside of rising gold prices. This can be a more dynamic way to invest in gold, with the potential for higher returns. However, mining stocks can be volatile and carry inherent risks associated with the mining industry. Factors such as operational challenges, regulatory changes, and fluctuating gold prices can impact the performance of mining stocks, making them a riskier investment. Physical gold, bars, coins, and their place in your portfolio. The allure of holding physical gold in your hands is undeniable. There is something profoundly satisfying about the weight and sheen of gold that digital assets simply can't replicate. It represents a tangible connection to wealth, a sense of security that transcends the digital realm of stocks and bonds. Unlike digital assets, physical gold is immune to cyber threats and market crashes. But before you rush out to buy gold bars, it's crucial to understand the nuances of physical gold investment. There are various factors to consider, such as the type of gold, its weight, and the associated costs. Gold bars, often referred to as bullion, are typically the most cost-effective way to purchase large quantities of gold. They are favored by serious investors looking to make substantial investments. They come in various weights, from small gram bars suitable for individual investors to larger kilogram bars favored by institutions. This variety allows investors to choose according to their budget and investment goals. For those seeking greater flexibility and portability, gold coins offer a compelling alternative. They are easier to trade and can be used as currency in times of economic instability. Government mints worldwide produce gold coins, each with its unique design, weight, and purity. These coins often carry a premium over the spot price of gold due to their collectible value. Popular options include the American Gold Eagle, the Canadian Gold Maple Leaf, and the South African Krugerrand. Each of these coins has a rich history and is recognized globally. When investing in physical gold, it's crucial to purchase from reputable dealers who guarantee the authenticity and purity of their products. This ensures that you are getting exactly what you pay for. Additionally, consider storage solutions that offer security, insurance, and peace of mind. Proper storage is essential to protect your investment from theft and damage. Home safes are an option for smaller holdings, while bank safe deposit boxes or specialized storage facilities provide enhanced security for larger investments. Each storage option has its pros and cons, so choose one that best fits your needs and circumstances. Exchange-traded funds ETFs, riding the gold wave with ease. In today's fast-paced financial markets, convenience and liquidity are paramount. Exchange-traded funds, or ETFs, have revolutionized the way investors access a wide range of asset classes, and gold is no exception. Gold ETFs offer a convenient and cost-effective way to gain exposure to the price of gold without the hassle of physical ownership. These funds track the price of gold by holding physical gold bullion in secure vaults, providing investors with a liquid and transparent investment vehicle. One of the key advantages of gold ETFs is their ease of trading. Like stocks, gold ETFs trade on major stock exchanges, allowing investors to buy and sell shares throughout the trading day with ease. This liquidity sets gold ETFs apart from physical gold, which can be more challenging to buy or sell quickly. Moreover, gold ETFs typically have lower expense ratios compared to actively managed mutual funds, making them a cost-effective investment option. However, it's essential to research and compare different gold ETFs, paying close attention to factors such as expense ratios, trading volumes, and the reputation of the fund provider.